Question number 2. From the following trial balance of Mukesh, prepare the trading and profit and loss account for the year ended 31st March 2016. Trial balance as on 31st March 2016. First of all, we will decide in which entry has to be recorded in trading account, or profit and loss account, or balance sheet, and according to its effect, we will pass entries into each account and balance sheet. First item is drawing of rupees 3,000. This is shown on liability side of balance sheet. Then furniture of rupees 6,000. This is shown on assets side. Purchases of rupees 36,000. This is shown on trading account. Sales returns of rupees 400. This is shown on trading account. Building of rupees 12,000. This is shown on assets side. Stock on 1st April 2015. This is shown on trading account. Sundry expenses of rupees 500. This is shown on profit and loss account. Rent rates and taxes of rupees 250. This is shown on profit and loss account. Wages and salaries of rupees 7,250. This is shown on trading account. Carriage inwards of rupees 250. This is shown on trading account. Carriage outwards of rupees 350. This is shown on profit and loss account. Bills receivable of rupees 800. This is shown on assets side. Traveling expenses of rupees 600. This is shown on profit and loss account. Bad debts of rupees 400. This is shown on profit and loss account. Sundry debtors of rupees 10,800. This is shown on assist side. Insurance premium of rupees 300. This is shown on profit and loss account. Postage of rupees 150. This is shown on profit and loss account. Motor car expenses of rupees 1,200. This is shown on profit and loss account. Cash in hand of rupees 880. This is shown on assets side. Motor car of rupees 5,800. This is shown on assets side. Capital of rupees 38,500. This is shown on liabilities side. Cash sales of rupees 22,000. This is shown on trading account. Credit sales of rupees 26,000. This is shown on trading account. Purchases of rupees 900. This is shown on trading account. Bills payable of rupees 900. This is shown on liabilities side. Commission received of rupees 250. This is shown on profit and loss account. Sundry creditors of rupees 4,380. This is shown on liabilities side. After completing trial balance, now we will see the adjustments. Number 1. Closing stock on 31st March 2016 amounted to rupees 12,500. Market value of stock amounted to rupees 14,000. Number 2. Provide depreciation at 10% on building and 5% on furniture. Number 3. Prepaid insurance premium was rupees 100. You are required to draw the tables. They are as follows. Solution 2. In the books of trading account for the year ended 31st March 2016, debit side, credit side, particulars, rupees. Profit and loss account for the year ended 31st March 2016. Debit side, credit side, particulars, rupees. Balance sheet as on 31st March 2016. Liabilities, rupees. Assets, rupees. First item on trial balance is drawing of rupees 3,000. It is less from opening capital, and this is shown in balance sheet. Liabilities side, less from capital, as less drawing of rupees 3,000, in a column, then furniture of rupees 6,000, this is shown in balance sheet. Asset side, furniture of rupees 6,000 in a column because there is an adjustment on it, we will see it later, then. Number 2. Provide depreciation at 5% on furniture, so calculation of depreciation is depreciation on furniture at 5% per annum, so 6,000 into 5 upon 100 into 12 upon 12 months, 0 cancel, 12 cancel, 60 into 5 is equals to 300, so the depreciation is equals to 300. This is shown in balance sheet. Assets side, less from furniture as less depreciation of rupees 300, so 6,000 minus 300 is equals to 5,700, and its second effect is shown in profit and loss account. Debit side, under the heading of to depreciation on furniture of rupees 300, then purchases of rupees 36,000, this is shown in trading account. Debit side, to purchases of rupees 36,000 in a column, because there is return on purchase, then sales returns of rupees 400, this is shown in trading account. Credit side as less sales returns of rupees 400. We will pass the entry step by step, please, do not jump on another entry. When the entry of sales will come, we will pass on the same, then building of rupees 12,000, this is shown in balance sheet. Assets side, building of rupees 12,000 in a column, because there is an adjustment on it, we will see it later, then. Adjustment number 2, provide depreciation at 10% on building, so calculation of depreciation is depreciation on building at 10% per annum, so 12,000 into 10 upon 100 into 12 upon 12 months, 0 cancel, 12 cancel, so the depreciation is equals to 1,200, it is shown in balance sheet. Assets side as less depreciation of rupees 1,200, so 12,000 minus 1,200 is equals to 10,800, and the second effect is shown in profit and loss account. Debit side, under the heading of to depreciation as building of rupees 1,200, so total amount of depreciation of rupees 1,500, then stock on 1st April 2015 of rupees 6,000, this is shown in trading account. Debit side, to opening stock of rupees 6,000, then sundry expenses of rupees 500, this is shown in profit and loss account. Debit side, to sundry expenses of rupees 500, then rent rates and taxes of rupees 250, this is shown in profit and loss account. Debit side, to rent rate and taxes of rupees 250, then wages and salaries of rupees 7,250, this is shown in Trading account, debit side, to wages and salaries of rupees 7,250, then carriage inwards of rupees 250, this is shown in trading account, debit side, to carriage inwards of rupees 250, wages and carriage inwards are directly related to product, hence, it is shown in trading account, then carriage outward of rupees 350, this is shown in profit and loss account, debit side, to carriage outwards of rupees 350, this is an indirect expenses which are related to selling and distribution, hence, it is shown in profit and loss account, then bills receivable of rupees 800, this is shown in balance sheet, assets side, bills receivable of rupees 800, then traveling expenses of rupees 600, this is shown in profit and loss account, debit side, to traveling expenses of rupees 600, then bad debts of rupees 400, this is shown in profit and loss account, debit side, to bad debts of rupees 400, it is a loss of the business, as per accounting rules, debit the expenses and losses, and credit the income and gains, then sundry debtors of rupees 10,800, this is shown in balance sheet, assets side, sundry debtors of rupees 10,800, then insurance premium of rupees 300, this is shown in profit and loss account, debit side, to insurance premium of rupees 300 in a column, because there is an adjustment. Adjustment number 3, prepaid insurance premium was rupees 100. This adjustment has two effects. Its first effect is shown in profit and loss account, less from insurance premium, and the second effect is shown in balance sheet, assets side. Let's see its first effect. Profit and loss account, debit side, under insurance premium as less prepaid insurance of rupees 100, so 300 minus 100 is equals to 200. Prepaid insurance is an advance payment of insurance. This is not expenses of current year, hence, it is less from insurance premium of current year, and the second effect is shown in balance sheet, assets side, prepaid insurance of rupees 100. This is not an expenses of current year, therefore, it is assumed that it is a cash of the current year. Postage of rupees 150, this is shown in profit and loss account, debit side, to postage of rupees 150, then motor car expenses of rupees 1,200, this is shown in profit and loss account, debit side, to motor car expenses of rupees 1,200, then cash in hand of rupees 880, this is shown in balance sheet, assets side, cash in hand of rupees 880, then motor car of rupees 5,800, this is shown in balance sheet, assets side, motor car of rupees 5,800, then capital of rupees 38,500, this is shown in balance sheet, liabilities side, capital account of rupees 38,500 in a column, so 38,500 minus 3,000 is equals to 35,500, then cash sales of rupees 22,000, this is shown in Trading account, credit side, under the heading of, by sales as, cash sales of rupees 22,000, then credit sales of rupees 26,000, this is shown in trading account, credit side, under the heading of, by sales as, credit sales of rupees 26,000, so 22,000 plus 26,000 is equals to 48,000, and less sales returns of rupees 400, so 48,000 minus 400 is equals to 47,600, then purchase returns of rupees 900, this is shown in trading account, debit side, under the heading of, to purchases as, less purchase returns of rupees 900, so 36,000 minus 900 is equals to 35,100, then bills payable of rupees 900, this is shown in balance sheet, liabilities side, bills payable of rupees 900, then commission received of rupees 250, this is shown in profit and loss account, credit side, by commission received of rupees 250, then sundry creditors of rupees 4,380, this is shown in balance sheet, liabilities side, sundry creditors of rupees 4,380, then after completing trial balance, now we will see the adjustments. Number 1. Closing stock on 31st March 2016 amounted to rupees 12,500. Market value of stock amounted to rupees 14,000. Every adjustment has two effects. Therefore, its first effect is shown in profit and loss account, debit side, less from insurance premium, and second effect is shown in balance sheet, assets side. In this adjustment, value of closing stock will be taken as lowest value, that is, of rupees 12,500, so first effect is shown in trading account, credit side, by closing stock of rupees 12,500, and second effect is shown in balance sheet, assets side, closing stock of rupees 12,500, then now we will close trading account, credit side is more than debit side, so total of credit side is 60,100, write it on both the sides, then total of debit side is 48,600, so total of credit side of rupees 60,100 minus total of debit side of rupees 48,600 is equals to 11,500. This is gross profit, and it is recorded on debit side as to gross profit carried down of rupees 11,500, and this profit is transferred to profit and loss account, credit side as by gross profit carried down of rupees 11,800. Now we will close the profit and loss account. Total of credit side is more than total of debit side, so total of credit side is 11,750. Write it down on both sides. Then total of debit side is 5,150. So total of credit side of rupees 11,750 minus total of debit side of rupees 5,150 is equals to 6,600. It is recorded on debit side as to net profit transfer of rupees 6,600, and this is transferred to balance sheet, liability side, add to capital, as net profit of rupees 6,600, so 35,500 plus 6,600 is equals to 42,100. Now we will close the balance sheet. Total of liabilities side is 47,380, and total of assets side is also 47,380, so the balance sheet is tallied.